Hello and welcome to Atlas Forge, the educational platform. This is Andy Morbitzer, founder and CEO of what we believe to be a great wealth of education and valuable information, a website and a platform we've put together to educate you on the encumbrances of your money, the future of money. The first month we talked about strategic metals and the Internet of Things, and that was our first month with great success. Strategic metals are one of those products that give you the ability to own, maintain, and control an asset that is what I believe and what we believe to be the ingredients of the future, everything electronic and the Internet of Things and so forth. And then last week we got into silver, really supply and demand. We looked at all things electronic. The future is highly considered technology and innovation, all use silver. So today we really wanted to talk about how to maximize profits in gold and silver holdings. As we get started, and the very first thing I want to really talk to you about is silver and gold, and I'll mix in gold here a little bit. Understand there's a difference between a government issued coin or currency, like an American eagle, a Canadian maple, an Australian kangaroo, or a Chinese panda. All these government issued gold and or silver, you are the bearer of said coin. You are not the owner. And the supporting facts that allow us to understand this is, have you ever wondered why on the front of an American eagle, for example, 1 ounce gold, why is there a $50 face value? Well, that $50 face value really allows the issuing government to seize that coin and buy it for face value. Even though gold today is what, $1,250 per ounce, on the front of every ounce of government issued currency, there's a $50 face value. And it's happened 3 times in the last 100 years or so where issuing governments have seized gold and they bought it back forcibly for the face value. So I look at, there's a big difference between a government issued currency and a privately minted bullion. Know the difference. One is currency and one is money. So I highly recommend, having experience in this for decades and decades, understand that, to my knowledge, jewelry and or privately minted bullion has not been seized, to my knowledge. So there's a great advantage if you're going to hedge and protect what you already have in financial markets, fiat currency, stock markets, bond, and the like, your 401ks. Why, of course, it's very difficult to take 401k or self-directed IRA and take those assets, even though they're offered, they're specific that you can only convert those type vehicles into government issued coins. You're much better off, if you're going to go that route, reduce your allocation to whatever you're doing in your 401k or self-directed IRA and physically buy privately minted bullion. It's a safer hedge. So we look at gold and silver, and today we're going to talk about how to maximize your profits within gold and silver. And I say the word profit. I don't look at gold and silver as an investment. I look at it as a hedge that you can speculate, or you can see the reciprocal of the paper and fiat currencies. Almost always, as a stock market increases in value, the paper assets, the derivatives, the securities, and the like, when that starts to crash, you see the capital flight or the movement of money. And historically, it's always gone into gold and silver. And now you're starting to see assets that were unheard of a decade ago: whiskeys, wines, rare colored diamonds, strategic metals, cryptocurrencies. These are new assets and really asset classes that were unheard of to the common man. The wealthy knew about it because you've heard of, royal jewels, and these are all different things, because what are jewels? They're gold and silver and platinum, palladium, and diamonds and rubies and emeralds. And these are all assets that are easily transported, have no capital controls, meaning you don't have to declare them as you cross a country or a border. There's no taxable event in any jewelry when you sell it. So it's the perfect store of value. It's the perfect hedge. And a lot of the assets that are considered jewelry, i.e. specifically diamonds, have a great track record of appreciation. So it's one of those assets that, yeah, they're a little pricey, but once we get you to that point, they're a great, great place to store some value and some wealth. So why buy gold and silver right now? Right now, I buy gold and silver simply because the fiat world, I do not trust it. As you look around the world macroeconomically, you see all these different countries that have currency problems. They're going bankrupt. They're insolvent, meaning they don't have any money left. And they've printed so much money in hyperinflation, it really deems their currency worthless. You've seen it in Iceland, Greece, Spain, most recently, right down in Venezuela. You're seeing all these riots. It's all because the people can't get access to their money, and the money that they do get access to, it isn't worth anything. Meaning on Friday, you could buy a pizza for, $10. Come Monday, hyperinflation has gone rampant. Now it costs $100 for the same pizza. So the currency is devalued, it's debased, it's worthless. And you're going to see this over and over and over around the world, macroeconomically, because we're an ecosystem built on debt, and free money has its consequences. And the best way to mitigate that exposure or that overvaluation of any asset is gold and silver. So why do we buy it? For those reasons. The fiat currency, the war on cash is here. Cash will physically just go away, and it'll all turn into digital. With the digital consumption age is upon us. People look at cryptocurrency, and that's really no different than what we're doing now, other than one is decentralized, meaning private, and really has a set number of coins, where as a fiat currency, which in history, all 4,000 plus fiat currencies in history have gone bankrupt. This isn't anything new. Humanity hasn't learned a thing about money and real money. They see these vehicles, which I call fiat currency, that they manipulate to their own advantage, their own self agendas. And we, the middle class, bear the brunt through taxation to repay all their indiscretions. Let's put it that way. So gold and silver, they've been around since biblical days. They're not going anywhere. They were the first money. They were the first currency. I strongly recommend that people always have 10% of their net worth in gold and silver. I mean, you look at the bond market, totally overvalued. It's paying negative interest rates. You look at central banks around the world. The top 20 central banks in the world are paying negative interest. That's why we bank in Singapore. That's future trading down the road. Why we diversified into other cultures, other countries, other monetary systems that have a much stronger reserve for my deposits that I put into their bank. They don't go out and take risky loans with my money and invest in things that are toxic, like subprime loans and derivatives and securities, and they bundle these things up and lose money. I mean, I look at governments around the world and countries as businesses, and right now the business that I'm in here in the United States is losing money. So as an investor, I need to get to a place where I'm making money, not losing money. Like I always say, protect what you have, invest from a place of strength. And that's what gold and silver is. It's that place of strength. It's the future. So we'll get into the slide presentation here. And I know I got a little long-winded just to open this up, but I wanted to really explain the reasons why we're getting into gold and silver, because everybody's heard of gold and silver, but they don't truly understand its power. And you guys don't understand how many things are working against you if you have all your money in the stock market or all your money in a bank. You're living dangerously, guys. I mean dangerously. Never in my 53 years on this planet have I seen more possibility of destruction of the monetary and financial vehicles that we assume that are going to be there and return dividends and pay us as we grow old and retire. It's changed. The 21st century has changed. The world economic powers and GDPs are moving. Money is moving. Growth is moving. Emerging markets are moving. And we see this throughout the Pacific Rim. So the best way to counteract these things is, first of all, know what you're doing. And we're going to get into that right now. Silver. How to maximize your profits in gold and silver. Understand the unique value that silver has over gold is it's used consumable. It's used in industry. And I don't mean just a little bit. Half of all silver mined goes to industrial usage. It's a consumable. It's in the conveniences and the products that we use every single day. And the sad part about it is we're not recycling. Last week, I think I showed a graphic of what 1 million cell phones looked like and how much palladium and platinum and silver and gold are in each one of these mobile devices. And I just talked about the mobile device, not computers or flat screens or fax machines or any of the infrastructure or Wi-Fi. Understand that these metals are very rare. As an investor, I love it because it's a consumable, meaning there's so much of silver that's being hoarded and invested. But on the other side, the side that's not, that would typically be the market is being consumed and discarded. Understand from what we see, if technological revolution happens like I believe it will over the next decade or two, silver will be the most highly used commodity on the planet, and it'll be the first element on the periodic table to become extinct. Now, how could that be possible? There's lots of silver. Well, there might be lots of silver, but understand it's getting more and more expensive to extract the silver out of the ground. And I'll show you some ratios here that, 100 years ago, the ratio between gold and silver was like 50 to 1 when you mined it. Now it's 9 to 1, meaning it went from mining gold, for example, you would have a byproduct silver that you would get approximately 50 ounces per every ounce of gold. Now in mining, 100 years later, now production is 9 to 1, meaning you only get 9 ounces of silver for every 1 ounce of gold. So mining production is on the decline. 50% of silver demand comes from industrial use, electronic, and solar, and that's huge. So you've got two things working here. You have really limited supply, meaning it costs more and less of it's coming out of the ground. The consumption at 50%, now add on a whole new generation and a plethora of products that are going to use even more silver, more strategic metals. Because look around, nobody's putting down their computers or their smartphones or their smart functioning gadgets anytime soon. Whether that be something you put in your eye with optical or on your finger, the use of silver is on the increase, not the decrease. And I learned something a long time ago in really investing is if everybody's buying, you should be selling. And I look at the last, 5 years, gold and silver has been in a real bear market for about the last 5 years. Right now, the best value when I look at commodities and I look at how expensive everything else is, bonds are expensive. The stock market is crazy expensive, highest price to earnings ratio in history. So when I look at being an investor, you got to look at things that make sense, things that have value. And what is the value proposition? If I can buy into a commodity that I know that's going to be highly consumable, highly valuable and scarce, and demand is increasing and supply is decreasing, that's the perfect situation. I can't think of a better place to hedge, store, and invest than in silver right now. So I look at silver as another way. Let's say that the monetary system crashes and the stock market crashes and we go back to whatever new world currency or whatever the International Monetary Fund, the IMF, would dream up through special drawing rights, and they present a new currency or what have you, it will be backed by gold or silver. I think we're at a point now where humanity has finally learned that fiat currencies are worthless because we're trying to invest and hedge and create and make a living in a world that is dictated by a currency that has no value. It's increasingly decreasing in its purchasing power. And that's killing the people that are on fixed incomes, the older, the baby boomer, the retired people. They can't sustain themselves. It's all going to come crashing down. If that would happen, let's just assume that gold and silver would increase by tenfold. Gold right now is what, $1,200. So I've got a typo on my screen. It says 12,000. It should be 120,000 times 10, of course. You have 1,200 times 10. So that really should be 120,000. So that's my mistake. So to buy an ounce of gold, you'd have to buy, I think you can get a gram of gold. You divide that by 31.1 grams, just like we did down below. So let's take silver today. When I did this a month ago, silver was at about $17. Now it's about, I think, $14.50. So it's dropped, 10%, 15%. But think about if we're going to use gold and silver as a money, gold at its current valuation, and if the fiat currency would collapse, gold as the new currency would come out being backed by gold. Let's assume that gold would be backed the new currency by 40%. That would give you about a $40,000 an ounce gold price. I mean, it's basic math to figure that out. So we look at what's the price point. You couldn't even use a gram of gold to go buy your groceries because it'd be way too much money. So the perfect money of the future, when I look at, okay, if the current system goes kaput and we bring out this new currency that's going to be backed by gold, which fundamentally I believe it should be, take silver, Let's say it was $17 an ounce. Now it's $170 an ounce divided by 31.1 grams. That would equal $5.50 per gram, or about €6. That is a usable unit, a functional unit that you could use as a money and or a currency, because you got to look at what's the other alternative. If you overpay for your groceries, let's say you had a gram of gold and it was, what would it be, $110 a gram? If you went to go buy, your favorite hamburger, Coke and French fries, it's not a price point that is indicative of usage. So I think silver has a much better real world application as a backing and or a new currency, because the price point is at a place where it makes much more sense that, each gram's $5. You can do a lot with $5. Because think of it this way. Let's say you went and bought your groceries that were $200 and you only had 3 grams of gold, and let's say that was $330. What would you get back? What would be the currency that you got back? Would it be the worthless fiat currency that's currently being used? So I really look at what's the usage, because I believe still in my lifetime there'll be a point in time where, of course, silver and or gold will get back into the money realm, because it's universally recognized. It's sound money. Now I look at JP Morgan Chase. Back in the day when I used to do trading and look at markets years and years ago, you would very rarely see any significant weight on anybody shorting silver or gold for that matter. But if you've noticed over the last 5 or 10 years, JP Morgan Chase is the largest owner of silver, 600 million ounces. And they attempted to really corner the world's commodities market, because they know that the fiat currency, bankers know, central bankers know that their money's worthless. I mean, don't be fooled, but it's very profitable for them. So they don't say a whole lot, and it's a big Ponzi scheme. But nevertheless, I've seen these shorts over the last 5 years, and slowly but surely, month after month, day after day, these shorts have been reduced significantly, the lowest in 7 years that I've seen them. So the attempt at cornering the world's commodities market is not working. So hopefully at some point here in the next year, silver's liberated. We'll see if that happens, but I'm a firm believer right now that gold and silver commodity prices are suppressed. It's something that I can't prove, but I watch enough markets and I look at enough numbers, and it's mysterious to me how some of these buys and puts and holds and ask, and it's mysteriously money that comes from I don't know where, and it seems like transactions happen when the market's closed. So it's very peculiar. It's very frightening to me, I guess is the best word. So we look at, what should we buy? Should we buy gold? Should we buy silver? Well, my guess, and why I love silver, number one, it's been around since biblical days. It's still an investment. You can still hedge. It's got industrial applications. Demand for silver is at an all-time high. Now, we haven't rolled out electronic vehicles yet. We haven't done the full-blown wind and solar panel yet. We haven't done full-blown drones. We haven't upgraded to 5G. We haven't upgraded our smartphones, our smart cities, our smart buildings. The demand is just now going to hit silver. So demand, even though it's set an all-time high, what do you want to bet? Next year it sets another all-time high, and the year after that, and the year after that, and the year after that. There's a population explosion happening around the world, both newborns, but more importantly, middle class people of ages of 20, 30, 40, 50 years old are now coming into capitalism. They're going to be the driving force of all this economic activity. All these new cars and phones and buildings and smart cities and the 5G, the internet, the Wi-Fi, the drones, the satellite, the solar panels. How do I know that's what's going to happen? How do I know this is going to be a driving force? And I just had this conversation this morning. What I just lived through, the population explosion known as the baby boomers after the Second Great War, it drove every economic industry in the world. I don't care if it was agricultural, monetarily, real estate, the stock market. You had a huge influx of people in a short period of time that drove, because it was consumption. They were savers. They were buying new homes, buying new cars, buying new appliances. And that was just with millions of people. Fast forward to the 21st century, real time today, what we're going to experience over the next 2 decades is what we just experienced in the United States over the last 30 years. You're going to see exceptional growth. You're going to see a population explosion, but not millions of people, billions of people. That, my friend, is a great investment scenario. Limited supply, increased population, increased demand, absolutely phenomenal. Now, we're going to quantify it a little bit for you here. Gold to silver ratio. And what I mean by that is mining. When these rare elements, precious metals, are extracted from the earth, not only are they getting more expensive to do so because of green initiatives from around the world, you look at mining, and mining being more expensive, labor, equipment, taxes, fees, regulation, all these different hoops you got to run through. And green, you got to protect the environment. Ancient history, there used to be 15 to 1, meaning for every ounce of gold's found, they would find 15 ounces of silver. It's always been known as the little brother. You know, gold's the king and silver's the little brother. But right now, little brother has got a whole lot on the king. Earth's crust, 21 to 1. Mining production, and that's a huge one, 9 to 1. You've always heard of picking the low fruit. Well, that's what mining companies do. They spend all this money in research and development, buy all this expensive equipment, and they go and they find the lowest hanging fruit, and they pick the lowest apple. Just like they strip the top of the earth's crust, they go the easiest, most profitable plot of dirt. That's what they attack first. But now, after the low-hanging fruit's gone, now you got to jump to get an apple. Now you got to put up a ladder to grab 2 more apples. Maybe you have to climb the tree to grab 3 more. It's getting more expensive to mine. And the more expensive it gets to mine without the yield, meaning now they're only getting 9 ounces to every 1 ounce of gold. So really, when you look at it quantitatively, silver, in my mind, should be 1/9 the cost. Let's just call it 1/10 the cost or value of gold. And if gold right now is what, $1,200, $1,250, silver right now in my eyes should be $120 per ounce. Why? Because that's what it costs to pull it out of the ground. That's the mining ratio, 9 to 1. And no, of that 9 to 1, or in this example, 10 to 1, half of that is consumed and thrown away. So now you look at 5 to 1. So now it's 20% of what the gold value is, $1,200. So now 20% of that, what is that? $240 would be a fair and reasonable value on silver, in my opinion. The other thing we need to look at is throughout history, there's always been a gold to silver ratio. And what that ratio has typically been is right around 40 to 50. On this slide, I have 50. It's really a range between 40 and 50 over decades, meaning the spot price of gold to the spot price of silver is right around 40 to 1 as the median average. Right now, and I'd have to do some quick math, but right now it's right around 80 to 1. If somebody wants to divide whatever the spot price of gold would be today, 1250 divided by what? 14. That should give you a great idea. Right now, 1250 divided by 14 is 88 to 1. Now I'm going to show you in this next slide, anytime in the last 30 or 40 years that the ratio between gold and silver has exceeded 80, the stock market crashed, and we're at 80 right now. 118 elements, rate of consumption and remaining amounts, it'll be the first element on the periodic table to become extinct. That's a bold statement. That shows you how much silver is used. There'll come a point in time in the future, mark my words, where all these landfills that are just flooded with keyboards and screens and electronics and old radios and, fax machines, copiers, cell phones. You know what? There'll come a point in time where that landfill will be excavated for its silver and gold and palladium and platinum. So when we recommend and we look at these things, buy at 70 to 80, sell at 40, and buy gold. So what does that mean? Exactly what I've been trying to explain. The ratio between gold and silver is at such a point, it makes all the sense in the world from a value proposition through historic numbers and data and charts and information that we've accumulated that buy silver when the ratio is between 70 to 80 or higher. Meaning if you can get The price of silver is that of such that it's 70 to 80 times what the ounce of gold is. Buy silver and hold. Now, the other side of that mountain, historically, when you only get 40 ounces, so the ratio between silver and gold is 40 to 1, you would want to convert your silver into gold and start the process all over again. Remember, everything's cyclical. Remember that one, everything is cyclical. And we've got decades and decades of histories and performance that what we present, it's fact. It happens almost like clockwork. And I'll have to give props to First Majestic Silver Company and Gold Silver. Put this slide together. I saw it in an email or something. And this really depicts the values or the appreciation of gold and silver during the dot-com boom. You see here, 93 to 98, silver outperformed gold by 36%. But only when the gold and silver ratio reverses from 80, meaning 80 ounces of silver for every 1 ounce of gold. And it's consistent. 2003 to 2006, same thing happened. The crash of 2008 to 2011, silver up 407%, where gold only went up 105. So when you talk about hedging what you have, protecting what you have, you can do it very effectively with gold and silver. But you can amplify those returns and that appreciation if you follow this one simple rule. When you get to about 70 ounces of silver to 1 ounce of gold, absolutely positively buy silver. And that's where we are right now. We are just at 80, somewhere right at the 80 to 1 ratio. So gold, even if you had paper gold and silver, convert your paper gold into silver gold. It's much better leverage. It's much better value. But these charts, they don't lie. So here we are, 2008, and it says 75.98. Actually, we're over 80 right now. So you can see what's going to happen to silver and gold within the next year. It's as easy as that. This isn't rocket science. So now we've learned today that there's a difference between a currency and a money and a privately minted gold piece versus a privately minted bullion. All right, moving right along. How your money became fiat currency. Like I said, we've got hundreds of years of tracking gold, silver, and really there's the Mint Act. Well, no, the Coinage Act, maybe it was called. You actually got 24.1 grams silver in these certificates. And you still see these certificates kind of hanging around, but just like gold, when Nixon took the dollar off the gold standard in 71, meaning it was no longer backed by gold, everybody knows about that. But what nobody knows about, or very few people, the better, the unknown asset, the better investment, silver, it happened 3 years prior to 71. They had this picture you see over to the right, the silver certificate. You could go into the bank with your $5 certificate and redeem that for silver. They stopped that in 1968 at the end of the Vietnam War. So 1913, Federal Reserve was formed down in an island off of Georgia and South Jekyll Island, it's called. Ed did a great job writing that book, The Creatures from Jekyll Island. I got a signed copy. It's a nice read. It was really deceptive back in the day where all the big elite and billionaires and, the owners of the oil companies, the steel companies, the Rockefellers, the Rothschilds, and the Catholic Church, and all these people got together down secretly and built what we now know is the Federal Reserve, which is a privately owned corporation that has a distribution arm of quote unquote central banks that really dictate the world. Control the money, control the people. Simple as that. So we were over leveraged, and we knew that fiat currencies at some point, every fiat currency goes bankrupt. So in 71, people were starting to redeem their US dollars for gold. And the US really stole from the rest of the world. They reneged on their commitment to accept US dollars back for the gold. And one of the biggest maneuvers in the world by the United States, how they pulled that off, I don't know. Maybe these other countries just didn't have any other choice. But at that moment, 1971, our money became currency, a fiat currency, a declining purchasing power, worthless vehicle for monetary exchange, in my opinion. It seems like every time we get elected officials or the powers that be, that somewhere along the line, I tell you, they sacrifice their morals and ethics for greed. And it's like giving somebody an open checkbook that has unlimited funds. You can just write checks as much as you want and buy anything you want, print more money, buy. And that's where we've been for what, 40 some odd years now. So 30, 40, 48 years. And it's declined ever since. You look back, and the biggest problems we have in the world, declining purchasing power, the people that, like I said, that are retired, but more importantly, production of the middle class, meaning what they produce and sell, and revenues have gone up, but wages are stagnant or slow moving. But it's true. After you account for inflation, you're making the same amount of money you did in 1980. So it's very prudent, guys, to weather these storms, to weather these assets that we provide for people are shock absorbers for the what ifs in life. What if this happens? Look at today. Stock market's crashing, cryptocurrency crashing. And everybody says, Andy, you're crazy. Why would you have, all these different assets? Well, here's why. Hello, it's called diversification. If you have all your money in one asset, I don't care if it's Bitcoin, a 401k, or cash. If anything goes wrong with that, you're done. You're starting over again. You're back at ground zero. I tend to have assets in a lot of different places, under a lot of different jurisdictions, with a lot of different acquired values, meaning usage. Gold and silver to protect what you have. Strategic metals, invest from a position of strength. We already know what the next decade or two looks like. It's going to be a phenomenal population, middle class explosion that are going to buy all these goods and services. So we already know what's going to happen. I strongly recommend that you take 10% of your net worth and go buy some bullion. And right now I'd go buy some silver bullion, and I would go buy it and I'd put it at home. 3 months worth of expenses. And anything more than that, I would vault outside of your home country, wherever it is you may live, and have assets out of your jurisdiction or your government's ability to seize, control, or censor everything that you have. Just makes sense. Let's say nothing happens and Bitcoin goes to $1 million, which it won't, and the stock market sets all-time highs at 100,000, which it won't. Guys, investing is about prudence. It's about looking into the future, acknowledging the past and the heirs. And here's the biggest hurdle. I used to work in and around finance, Wall Street, satellites, been in huge insurance companies, largest in the world, boutique, investment houses, mortgages, LIBORs. Guys, I was just like everybody else up until about 2008. I lost half my net worth in the stock market. I sold financial products. I was invested in financial products. It's the only thing I knew. And then in 2008, I lost half my net worth. I experienced enough pain to make the conscious choice to change my exposures to all this nonsense going on around the world. And it's getting worse. Look around. They want you to believe that everything's cataclysmic. Well, maybe it is, maybe it isn't. But let's assume that I'm wrong in the financial markets. What have we lost? Nothing. We've diversified. We've become a global entity. We've become bulletproof. We have multiple assets in multiple jurisdictions. I don't care what goes on. You're protected. You're hedged. That's the whole meaning of hedging, mitigating risk. 10% of your net worth should be in a bullion. Right now, my best choice would be silver. And then once you do that, you want to have a little bit of cash on hand, physical worthless dollars. Because yes, you might need it to survive for a day or two or three or a week. Look at what happens around the world when these financial markets go belly up. The banks close the doors, lock the doors, turn off the ATM machines. You can't get access to your own money because they don't believe it's yours in the first place. See the problem? So the question you got to ask yourself, if you've saved no gold or silver, you have no stash at home. Let's take Europe, where Spain or Greece, they were limiting people, capital controls. You could get 30 euros a day. 30 euros a day. Can you support your family, meet your bills, and do your daily routine on 30 euros a day? Doubtful. Very, very doubtful. And at the end of the day, what if I'm wrong? Nothing's lost. You still own, maintain, and control every asset. It is financial insurance where you're paying a premium, you're paying yourself your own premium that if nothing happens, guess what? You get all your money back. Silver, demand. We've talked a lot about supply and demand. Here's another one. Silver jewelry demand in India has soared. Just like I told you, silver demand is the highest it's ever been last year. And like I said, it'll come out again this year. This really depicts gold has remained stagnant and silver is on the increase. Why? Well, a couple of different factors. India seized the $1,500 ruble, where it really eliminated the ability for this culture, this country, to buy gold. And they put tariffs and tax. Remember, India is the number one buyer or consumer of gold in the world for like the last 100 years. They buy a lot of gold. 78% of India's household savings are in gold. Think about that. So it's billions and billions of dollars. And now it's being suppressed, just like they did years ago. They put a tax on silver, just like they're doing now on gold. So what does India do? They're buying more silver. So if you took just, and I won't get ahead of myself, the Indian government has been trying for years to curtail demand. The first one didn't work because the rate of interest offered was too low. They were trying to buy these things back, but they didn't give up. The recent efforts have started to make a dent in gold demand. The recent monetization scheme has been more effective due in part higher interest rates, but the government demonetization of the $500 and $1,000 rupee last November has had a huge impact. So you're taking the number one country in the world that buys gold, and when you look at 2016, 17, the tonnes in which these were being bought, it's at a 13-year low, where silver has now skyrocketed. So in this particular scenario, if you just took 10% of the money that was typically going to gold in India, because the government's really clamping down on the buying of gold, now they're buying silver. So if you took that 10% that has typically been allotted for gold and you apply that to demand in silver, why, of course, silver is going to skyrocket. So now you've got limited supply, high demand, and the number one country in the world that is now converting from buying gold to buying silver. Wow. Absolutely, positively, silver right now is the best value on the planet. It just makes so much sense. Between the electronic boom, the population, the high demand, the reduced production, and the number one country in the world moving toward silver, I think it's a great play. So you can easily see how just 10% switch from gold to silver inside India will result in a massive increase in global demand. Demand would grow by an incredible 65%. And what they mean by that, we're already short supply. If you would go to any huge industry or market in the world and you go try to secure a huge amount of silver, it's just not available. So anytime you have a growth of 65%, that increases demand beyond what's already a very limited supply and a consumable. It's the best of both worlds as an investor. There's no way the price is forced higher and higher. And I think that's going to continue. Wait until all these gadgets start being built. Wait till China builds its, super solar farms that are all need silver. It's a beautiful thing in my eyes. So just a 10% shift. So there's a lot of variables going on, all in favor of silver. And I know you guys have all heard silver and gold, these so-called gold and silver experts, and they make great, very compelling points about gold and silver. It's their whole life's work. You look at the Jim Rickards, who's a gold bug. He's been, crying gold for decades. Well, sooner or later, he's going to be right. Or you take the other fella, I can't think of his name, Ralph, and he's, all for gold and silver and these types of things. But I think they have such tunnel vision that, yeah, these are great products, but the world has become much more diverse. And the investor needs to be much more diverse. And we need to get into different products. We're very limited to our options as far as globalizing our investments, becoming a global entity, being our own bank. Cryptocurrency helps a ton, don't get me wrong, but there's only so many assets out there that are easily liquidatable, meaning you buy and that you could, there's an easy way to sell them. Because even gold and silver, at some point, you really want to convert your gold. Like right now, you'd want to convert your gold into silver. Where do you do that, and how do you do that? And if you go to a pawn shop, you go to your local jeweler, or maybe you're blessed enough to live in a country where they actually accept gold and silver. Here in the States, they don't. You can't go into a bank and go buy gold or silver. That's the last thing you'll find. So it's kind of ironic, but that's what we do at Atlas Forge. We buy back. We have a buyback policy that I think is very fair and reasonable. There comes a point in time that maybe you want to liquidate a gold or a silver. Some gold and silver, some people like collectibles, that they assess value for rarity and the quality or the grade of this or that. And that's great. I look at that as an investment. That's a coin that if kept in pristine condition and it's very rare, then just like any fine art, it should appreciate in value. But then I don't use the word appreciate, increase in value, because real property, in my eyes, as an investment, appreciates. You don't get paid a dividend. It's not income producing asset. It's an investment where you buy something that's very rare, maybe uncirculated, and increases in value. And if that's what you like, great. It's a very singular, it's a niche. There's only so many people that collect coins or stamps or what have you. And know if push comes to shove, if you have 1 ounce of gold and it's dated from, I don't know, 13 BC or something like that, quite honestly, that may not have value to the person you're selling it to. So it might be very difficult to sell a collectible coin. So I'm not saying you can't. I mean, there's documented history throughout the world of people and valuable coins and stamps and assets alike. For me, that's an investment. That's investing in a very rare collectible or art. I'm talking about principally hedging and doing it in such a way that you can liquidate immediately if you need to, or within a timely fashion. A lot of problems with the gold and silver industry, and it's always been this way. What do you do with it once you want to sell it? Very difficult to sell as an individual. I mean, you might go to eBay, you might go to one of those places, but that goes both ways. If I'm a buyer, how do I even know what I'm buying is real? And then you got to meet the person, and maybe that'll be a good experience. Maybe it won't. So what I'm saying is, you've got to buy it from somebody trusted, well-known. We've got vaulting locations in 4 different countries and 4 different continents that you all own, maintain, and control. And in some cases can be done anonymously, but I like it. I love the location. So it all depends what you want to go do, but I highly recommend that you buy bullion. I highly recommend that you keep some at home. I highly recommend that any above that 3 months worth, that you seriously consider vaulting it in an international area. We appreciate all of you that have your first look at strategic metals, actually took a position in strategic metals. It's absolutely exciting for us. I think we're the only distributors in the world, an ISO 9001 regulated wholesaler and distributor worldwide. Yeah, you can see some strategic metals on eBay as novelty. You're unsure of its origin, its purity. Where could you sell it back to? And they're so grossly overpriced. That's why we brought strategic metals to the masses. We can start, you can buy it by the ton, you can buy it by the gram. You can start, anywhere at $50 to unlimited amounts. You can buy it in such a way where you do dollar cost averaging and commit, say, $50 or, $100 or $500 a month that you can pick one specific strategic metal or mix it up. But the prudent investor, guys, you got to look at the big picture in the long haul. This is money there's 4 types of money. Money you use on an everyday basis, money that outpaces inflation, money that you invest for the long term, and money that you speculate with. Gold and silver bullion, that is your meat and potato. That's your plan B, your hedge, your safety net, your insurance. And you could throw strategic metals in there. I look at cryptocurrency, the Bitcoin, as speculative. And we'll get into different allocations. We'll get into different strategies on what makes sense, because you can't take all your money and be all in one asset. You don't want to take all of your money and put it into very high risk, high reward speculative assets. You need a nice mix. Protect what you have, invest from a position of strength, and then speculate in a safe environment where you can control and own and maintain that. But you need some education. And I'm specifically talking about cryptocurrency. And next month, we're getting into cryptocurrency. We're going to launch some things that nobody's seen. We're going to do some education and look at it from a totally different perspective. Not because it's crashing today. I mean, Bitcoin's died 100 times over already. But you need to know the ebbs and flows. You need to know, why is it so volatile? Why is it, lost 10% of its value or 15% of its value in the last 3 days? Why is the stock market crashing? Why was it, 27,500 2 months ago and now below 25,000 and falling? Macroeconomics is easily understood. All you have to do is follow the money and prepare prudently. Easy. And once you get to that point where no matter what happens, you're protected, you're hedged. And that's the best advice I can give you. And we're going to continue to do this every week. We'll come in with a new topic. Any past podcasts, rants, or educational webinars we've done are, of course, on atlasforge.com. Go ahead and like or join our Facebook group, on Discord, the Twitter, or what have you. And you know what? Go check Atlas Forge out and tip your toe in. Buy some strategic metals, buy some gold and silver. So with that said, this is Andy Morbitzer, Atlas Forge. Take care.